Okay, we are live. We are live.
Yes, we are. We'll get started when we get some viewers.
Yes, we will.
Hey. I think we got like 2 viewers. We got 5.
Come in, come in, come in. What's going on?
How's everybody doing? Say hi in the chat. Let us know that you're here. All right. Hey, how's everybody doing this evening?
Hello, hello, hello.
Perfect. Well, thanks for joining us, guys. So tonight we are going to be talking about tax planning, saving, and preparing for gig workers. Not just gig workers, but your self-employed and your independent contractors. So today we're going to go over taxes that are attached to being a gig worker, key deductions and credits, tax planning strategies, pitfalls to avoid, as well as tools and resources to help you guys out. And then we'll have a live Q&A session. So we'll go ahead and get started.
Are you guys excited about this? Let us know in the chat.
So what is a gig worker? A gig worker is often an independent contractor, a freelancer, someone that's self-employed. Basically, they receive their income on a 1099 form, either a 1099 NEC or a miscellaneous, just depending on what kind of work you're doing. You want to go ahead and go over
Sure. So we're going to jump right into it, right? The gig economy tax overview. So what we're first going to talk about is we're going to explain self-employment tax. We're going to explain the importance of tracking your expenses and quarterly estimated taxes.
Perfect. So let's first start off with the self-employment taxes. So what is self-employment taxes? To sum it up, self-employment tax is the employer and the employee version of Social Security and Medicare taxes. You as a independent contractor, a person that's paid by 1099, you don't have taxes deducted from your pay usually. So when you usually work the W-2, the employer handles their version of the taxes, and then you are handling your version. But because there's no taxes being deducted throughout the year on that income, you are taxed both those tax rates on self-employment. Does that make sense? And if you guys have questions, please feel free to ask questions in the chat.
All right, no questions. We're going to move right along.
All right. Aryelle, you want to go ahead and talk about how to calculate these self-employment taxes?
Sure. So calculating your self-employment taxes, right? To calculate your self-employment tax, multiply your net earnings from self-employment by 92.35% to determine the taxable amount. Then apply the current Social Security and Medicare rates. So let's jump into the calculator we have, Shalonda.
Perfect.
You want to explain the calculator?
So basically, again, you're going to multiply your net income by 92.35%. So here in this example, you have $80,000 as net income, and then you're going to multiply it here, and then this is what your taxable net income is going to be. So then your taxable income is multiplied by the 15.3%. Self-employment tax would give you $11,000, $304 of taxes owed as a self-employed individual.
So with this calculator, right, if you have a person who's self-employed and they ask you, well, how do I calculate my self-employment tax? You can give this formula to them. Does that make sense?
or you can use it yourself as you're thinking about doing quarterly estimated payments, which we'll get into here in just a moment. But before we transition to that topic, is there any questions? Please feel free to ask questions in the chat as we go along. All right, perfect. All right. So we're going to talk about deductions to your taxable income, and Aryelle is going to go ahead and talk about all that good stuff. But first, we'll talk about the self-employment tax deduction that you do have. So you may have, like in that example, the $11,000, but half of that is a deduction towards your income that you can take. So that you'll minus that as well. So that's one deduction to start. All right, Aryelle, take it from there.
All right, let's go into our common deductions for our self-employed and gig workers, right? Mileage, car insurance, cell phone, internet, office supplies, vehicle repairs, and maintenance. That's just some of the common deductions that we can take as self-employed individuals or gig workers, right? Now, can we take all of these expenses? Depending on your job, right? Depending on what your self-employment is or what your gig is. For example, if you do Uber, you can't take office supplies, right? Because you don't have an office. But you can take either your mileage and your vehicle repairs and your maintenance. You can take your car insurance because you're using your car. Does that make sense? Jonathan has a question. Is this in reference to the 600 the IRS was talking about?
Can you explain that a little bit more? Are you speaking of the 1099 issuance?
That's what I think
required. So okay.
I think he's talking about the 1099Ks, right, Jonathan?
Or the NECs. The threshold for 1099 to be issued to anyone is $600. So if you have a job that you did for somebody and you made under $600 on that one job and you never worked for that particular person again, they don't have to issue out a 1099. You have to just account for that income on your own. But anything over $600 as a self-employed individual, you should be receiving a 1099 from the people that you're doing contract work for.
I figured that's what he was talking about, the 1099 case. Okay.
Okay, perfect. All right. Any other questions about deductions? Keep in mind, deductions must be necessary and ordinary for your industry of work that you're doing.
Correct.
So no, you cannot deduct the trip to the moon as a daycare provider.
And no, you cannot deduct a trip to Vegas when you're doing Uber. They mentioned Uber, Lyft, and Cash App. So, okay. That is considered gig work or self-employed for the Uber, Lyft, and Cash App. And they do believe they receive a 1099 NEC for Uber, Lyft, and Cash App. But what happens with Cash App is that Cash App should be, if it's in a business name, they'll get to, hey, Shanti, if it's Cash App, they'll get a 1099 NEC if it's for the business. I will be teaching a class on the 1099Ks again coming up, Jonathan. Be on the lookout for that. Okay, love?
Yes, but so they still pause that whole situation of issuing those out at the $600 threshold. So people still won't see those coming out because they keep pushing it back.
But we have been seeing, I did see that some people are still getting them from Cash Apps. So if you do have a client that has one, we do know how to go in. We do know how to go in and help you rectify that situation with your client, okay? Because they're not supposed to be issuing them right now, but y'all know the IRS do what they want to do.
Yes, correct. All right. Perfect.
Any more questions, Jonathan, before we move on?
Okay. So as we speak of deductions, in order to take those deductions, you need to make sure that you're keeping accurate records. You can't say, hey, I have this deduction, that deduction, and no information to prove that you had that actual deduction. So those records would be bank statements, Cash App records, any kind, like those 1099Ks, if you're using like PayPal and all those different platforms as well to receive payments. there should be statements that are attached to those. So those are going to be accurate records as well as receipts. Just keep all your receipts. And then we'll talk about the different tools that are available to you guys to help track these expenses.
So we like to tell our clients, right, to keep everything separate. Separate your personal and your business finances, right? Open a separate bank account for your self-employment or your gig income and expenses. This separation makes it easy to track business transactions and ensure that personal and business finances are distinct. You don't want to end up commingling your funds when you have a business. Does that make sense, everyone? Because what's going to happen is when you go to your professional or you start doing your taxes and you're printing out all your bank statements, you're going to say, oh, wait, was this for personal or was this for work? So if you have a separate bank account just for your self-employment or your gig work or whatever you want to call it, you'll be able to track your finances better. Does that make sense, everyone?
It makes life a whole lot easier for you.
It really does.
And also for people that are LLCs, this is going to be very important for you. Because in order for that liability protection to be in place for you, you have to be a separate entity of yourself in business. Mm-hmm. And if you can't be identified that by how you're commingling funds, you will lose that liability protection in the event someone wants to sue you or make you liable for something. So keep that in mind too.
So our thing is this: when you open up your LLC, go straight, get your EIN, go straight to the bank.
Yep.
Go straight to the bank. Any bank. Put $5 in there. $100. Don't matter. Go straight to the bank.
Yep. And just separate them. Even if you're paying yourself, transfer money from your business account to your personal account. Don't do those transactions, your personal transactions, out of that business account.
And keep records of that. Don't take out of your business account cash, because you can't keep a record of cash unless you're writing yourself a receipt.
Correct. All right. Any questions on that part of the discussion? Perfect. All right. And Aryelle wants to talk to you guys about quarterly estimated payments because it's her favorite thing to do.
Really not. I'm tired of giving my money to the IRS, y'all. I'm just tired. All right, let's talk about these quarter estimated tax. These quarter estimated tax payments, right? So quarter estimated taxes. Since self-employment and gig workers are typically considered self-employed, you may be required to pay quarterly estimated taxes. Paying these taxes on time can help you avoid penalties and better manage your cash flow. 1 second. Jonathan has a question. That's where that new reporting requirement for LLCs comes in.
That's a whole nother conversation within itself, and we'll probably be doing a live about that as well in the next couple of weeks. So just stay tuned for that, but that's a whole nother beast.
Yeah, that's a whole nother 3-hour topic, y'all. No, we're going to skip this slide. This second one, yeah. So when do we pay quarterly estimated taxes, right? So the first quarter is January 1st to March 31st. Is due April 15th. So everybody thinks that, oh, that's when them checks dropping for us, right? That's when the first quarter starts. Everyone who owes the IRS when they file their taxes has to pay by April 15th. That's for businesses, LLCs, everything, okay? We all tax professionals. We know what the April 15th date. That's the day we say close.
Because April. Unfortunately, no, because most of my customers do extensions, so I work year round. Unfortunately, but yes,
I work year round too. But y'all, we be like, okay, April 16th, we trying to get out the door. We trying to party, right? So let's go to the second quarter. Second quarter, April 1st to May 31st. That's due June 15th, right?
That's not even correct. That's April through June.
It's April through June?
Yeah, that's not correct.
Okay, so we need to change that. So that's April through June. Oh, yeah, I see it now. So third quarter third quarter's right though. June 1st to August 31st. That's the only one we got wrong. Well, I got wrong.
Anywho, those are the correct payment dates.
Yeah, those are correct payment dates. I messed up on my months, y'all. I messed up on my months. Don't be coming for me right now. We've been working. It's tax season, right? So the third quarter is due September 15th, and the fourth quarter is due January 15th of the following year. Any question on the due dates? Well, at least the due dates.
So as far as the IRS is concerned, if you are expected to owe at least $1,000 in taxes, you need to be making quarterly estimated payments. It's really a requirement. A lot of people don't do it, but it's a smart thing to do because it'll save you. It'll save you a headache at the end of the year when you go to do your taxes. And like, you owe $15,000. You're like, where the hell am I about to get $15,000 from, right? But if you paid that $15,000 throughout the whole year, and maybe you paid $15,500, guess what? You're going to get a $500 refund at the end of the year for those quarterly estimated payments that you paid throughout the year. So think of it as a planning tool as well.
I like to tell people, do you want to owe the IRS or do you want to get a little bit of money back? Which one? I prefer to get a little bit of money back and then to owe them $20,000 and $30,000, depending on your income, right? Yeah. And then you have the penalties and interest that come with when you owe them.
That's absolutely correct. Penalties and interest.
And that accrues.
And it's every day. Interest is calculated every day. It don't take off for holidays, vacations, birthdays, or nothing. Every day, penalties and interest is going to be calculated. So keep that in mind.
Even on the weekends, y'all. They do not care. Yeah. All right, Shalonda, your turn.
All right, so let's talk about some tax planning strategies. So, like we just talked about the quarterly estimated payments. So that's setting money aside even once towards the end of the year, just in case income increased in that last quarter. Having money set aside to cover those. So that's a tax planning strategy. Using accounting software for tracking. So your QuickBooks, whatever the case may be, that's going to be your best friend. Even if you use a spreadsheet, that's fine. And then also think about retirement. Yes, you may not be employed by a corporation or another company anymore that has the 401ks and the pension. Be your own 401k. Start your own retirement plan. And it also saves you on taxes as well. And again, those are the payments that we talked about setting aside. I typically tell my clients about 33% of the income that you receive, set that aside for taxes. That'll keep you in a safe spot.
Mm-hmm. I do that as well.
All right. Do you want to go ahead and tell them about the pitfalls to avoid?
Yes. So avoiding the tax pitfalls, not saving for taxes, missing the quarterly tax payments, and overlooking deductible expenses, right? So let's say you made $100,000 and you didn't pay enough in taxes, but you have your little nest egg away. That's great. But what if you don't have the nest egg away and you end up owing them? Now you're accruing the interest and penalties that we talked about earlier daily because you owe them. Missing your quarterly tax payments on the due dates. Even if you send them $100 or $200, they don't care. Send them something. Yeah. Right? Overlooking your deductible expenses, making sure that for your area of expertise that you're in for your business, whatever your business is, that you're able to deduct everything that you can. Right? Making sure you have a list. This goes back to record keeping. Having great records mean that you'll have great deductions to put on your tax return. Long as it's calculated, long as it's in the right spots.
And documented correctly.
Right.
Yeah. And legal.
Correct. Let's talk about the legalness. We all get it. Oh, I want to put this on my return.
Okay. So let's start talking about some essential tools for you guys. So you have your accounting software. We talked about QuickBooks. There's Xero. There's Wave. There's a lot of different programs out there now to help you track your expenses. QuickBooks is one of my favorites just because it's easy for me to help my clients from my end as an accountant. But they do have an app. It helps you track mileage. You can do invoices. You can do a lot of things on this app on the go. So it will be a good tool, but there's plenty of other ones. But get something. Something is better than nothing. Even if it's just a Google Sheet or an Excel, something is better than nothing.
I use QuickBooks and Xero for my clients as well. I prefer QuickBooks because it's user friendly, where my clients could just take a picture of their receipt and it just uploads it. And, that's a quick, easy tool for you guys being out there doing whatever you need. Oh, snap a picture and it goes right to your QuickBooks.
So, and then you can file that receipt away because you've already took a picture of it. It's uploaded into QuickBooks, and then there you have it. And QuickBooks have good technology where it will kind of categorize that transaction for you or give you a hint of where it needs to go.
Correct. Any questions?
So then if you are one of those do-it-yourselfers, right? There's plenty of do-it-yourself tax software out there. You have your TurboTax. H&R Blocks has a DIY. TaxSlayer has a DIY. The IRS has a free file. And then there's a couple of other ones. If you are one of those people that feel like, I'm just going to do it myself, hey, have at it. But there's plenty of tools out there for you. But just don't not do your taxes.
Right. Do not put it off and say, oh, I'm going to wait 3 or 4 years because I know I'm going to owe. That's the worst thing. You're going
to owe your firstborn grandkid and everything else trying to put it off.
Right.
All right.
And then my favorite one is always just hire a professional. Hire one of us. Hire somebody.
Hire somebody that know what they're doing.
And know what they're doing.
Definitely be careful. Please be careful. Anybody can plug some numbers and some information into software and call it tax prep, but vet your tax preparer, your tax professional. You can go to the IRS's website and see things as far as like if they have a P10, they're on the list of having that continuing education. Ask about their education. Ask about anything, but don't be afraid to ask questions and vet the person that you're giving your personal financial information to. Ask for references. Check their Google reviews.
I like to tell my clients all the time. I say, hey, Google me, right? And then I also tell them, hey, go look on the IRS website. I'm there. Robertson, my last name. Like, I be quick to tell them because at the end of the day, what you don't want to happen is you're not knowledgeable about what's going on in your return and you just sign that return, right? And guess who's liable for that return?
You are.
You are, because you signed that return.
You're agreeing to the information that is in a return by you putting your signature on there. So please read. Please read. Please ask questions. Get a second opinion. And if somebody does not want to give you a copy of your tax return, that is a red flag. That is a red flag.
And before you sign it, always look at the bottom and make sure their name is on the bottom of that return and their P10, right? Because what you don't want it to do is say self-prepared unless you went to H&R Block and did it yourself, TurboTax and did it yourself, right?
But yeah, don't let people play with your taxes because it's going to come back on you.
Facts.
All right. So we are to the portion where we are doing live Q&A. So if you have any questions that you want to ask about any situations, we are here to answer those for you guys. So please do not be shy. Go ahead and drop your comments in the chat and we'll go ahead and tackle those.
Yeah, Jonathan, the IRS do not play. They don't play. They don't care.
How many of you filed your taxes already? That's the favorite question. Have you filed already?
Y'all want to know if I filed already? I think tax professionals are the last ones to file their taxes. I think we always wait to the last minute to file our taxes.
Which is as long as they get filed on time.
Yep. Jonathan, you filed your taxes already? Okay, I see you. Jonathan was like, I wasn't waiting. Does anybody have any questions they want to ask?
Scenario they have questions on. Yep, we're here.
I did not keep receipts of the traveling nurse, but I use my debit card for everything. How can it work in my favor for tax write-offs the bat?
Bank statements, girl.
Yep.
Bank statements. Those are going to be your best friend. So those will suffice. Yep. And with your traveling nurse, if you are driving your own vehicle or whatever, please make sure that you are tracking your mileage as well. So you can see which one will be greater, taking the gas, the actual deductions, or the mileage. Sometimes the mileage plays better in your favor. So that's something to consider as well. But that's good that you use your debit card for everything.
Mm-hmm.
You're welcome, Regina. Anybody else with any other questions? And we're here to make sure you guys have the information you need to be great at the end of the day. Because I know being self-employed is stressful because you don't never know, and you hear all these horror stories about people owing taxes and having bank accounts levied and all these other things, and it just frightens people. But we want to be able to help you guys navigate through all that stuff.
Right.
As long as you do what you're supposed to do as far as keeping accurate records, making your quarterly estimated payments, and even if you don't make your quarterly estimated payments, paying your taxes when they're due, when you file your taxes. And just because you filed an extension, that does not mean you are extending what you owe. You still need to make an estimated payment to the IRS before April 15th. Because if you don't, and when you go file that return come October, you're going to have penalties and interest from April 15th all the way to October.
Correct.
So keep that in mind.
And a lot of people don't understand that. They think, oh, I filed an extension, so I'm good.
No, you're just filing an extension to extend the time of filing the return itself.
Correct.
But you're not filing an extension on the payments. And even if you do file your taxes you owe, the IRS, I know they sound scary as hell, right? But they are very flexible. They have installment plans that you can pay as little as $25, $50 a month.
And all you got to do is send them a payment. Don't wait, right? You always hear people say, oh, I'm going to just wait till I get the money. No, don't wait. Send them $25 because that'll trigger a payment plan for you.
Yeah. And if you don't already have an IRS.gov account, I recommend everybody to get one so you can have access to your personal account. If you need to ever set up payment arrangements or whatever, you can do so within that system. So you don't have to sit on the phone with the IRS. If you have questions or if you need to make a payment or anything like that, set up that account. It's going to be your best friend.
And it also uploaded it where now you can do business accounts as well for the IRS. So if you have a business, you can look at your business taxes as well.
All right.
So any more questions? Anything you guys want to talk about before we leave?
All right. So the key takeaways is review your tax situation and plan ahead. Utilize deductions and keep detailed records, and consider getting advice from a tax professional.
Always.
Thanks, Jonathan. All right.
And just ask a question. You know, say, hey, I have a question about my taxes, or I have a scenario, right? We're all here to help each other. Tax professionals are not scary people, even though we may seem a little bit scary, but we are not. We are here to help you guys.
But no question is a dumb question. So don't think of it as a dumb question.
Correct.
Because you don't know what you don't know. And the only way you're going to know is by asking questions.
Exactly.
All right. Well, I thank you all for joining us tonight. Again, please feel free to reach out to either myself or Aryelle with any questions that you guys may have pertaining to your taxes, self-employed taxes, being a contractor, establishing your LLC, or just kind of reviewing some things within your self-employed or an entrepreneurial journey to make sure that you are on the right track.
Yep. Just know we're here to help.
All right. Thank you all. Everybody have a good night and stay tuned for our next class. We'll be dropping that information soon. Have a good night.
Good night, you guys.